It's important to mention that mBridge supports cross-border payment of local currencies, of central bank digital currencies. And part of this infrastructure people push back on is the bond market and the fact that these countries don't have enough unity with one another to have a common currency. But that's been addressed in the architecture here, where each country will have their own monetary autonomy, their own monetary policy, trading their own currencies within their own economies across the mBridge, which sidestepped the SWIFT, and then settling in a common token, if you will, a common currency unit that will be pegged to gold, 40% and a basket of 60% local currencies of the BRICS nations. So the transactions being done outside the dollar will massively impact the value of the dollar and its role in reserves. And when you realize that the bond market has paled in comparison to gold over the past 25 years by a factor of 100%, in other words, 10-year treasury has done half as good as gold has for the past 25 years, but with no counterparty risk, it's a huge, huge blow to the reserve status of the dollar. So transactions, reserve, and image of the dollar are all being massively compromised, and you can see the pieces are coming together much more swiftly. 59 countries came out of the last meeting in Novigrad 2 weeks ago and said, we're applying to BRICS. You add that to the 10, you're talking 69 countries and a that's 3 times the size of the European Union just in countries alone. And when you realize that, unlike the European Union, every one of these countries will have their own currency, but a common settlement currency, it is the composition of the settlement currency that destroys both the transaction and the settlement value of the dollar in the treasury market. What it does is it greatly starts to reduce demand for both. And as there is less demand and more supply, we would see inflation and interest rates go higher, which ultimately, little by little, starts to wreak havoc upon the system. Now, if it gets to a point where people realize that this is a global realization, that this is a trend in motion, and all of a sudden what starts out slow and orderly turns into a stampede through a rotating door, not everyone makes it through alive. And it becomes a very, very unorderly chaos type of situation that could immediately overwhelm the United States with massive inflation. And we've talked about that forever, what that looks like as interest rates go parabolic. And in the face of rising interest rates, you have banks that are undercapitalized and overleveraged, insurance companies that are loaded with treasuries, and stocks and bonds and real estate that are all inversely correlated to that moment. And this is why I keep coming back to the fact that all of the actions that we've taken, both at home and abroad, are just too foolish to not be planned. And what does it look like? I think it's a frightening thing when you realize that inflation is going to continue and probably much worse. And you take everything out of the equation and just say we have, 150 trillion in unfunded liabilities. Who's going to pay for that? How? Let alone the massive immigration problem that isn't calculated by the Congressional Budget Office, who said that in less than 6 years, every penny that we take in income tax receipts goes just to pay mandatory entitlements and the interest on the debt. Remember, military spending is discretional. Who pays for that? How do we maintain our supremacy around the world when we have to borrow money to fund our military and borrow money to keep the lights on? Borrow money just to pay what we've already borrowed. It's a bad situation getting worse. So I don't know when that all at once moment happens, Dunnigan. I think in a world of probabilities, it happens quicker than most people would ever think possible. And it happens in a way that catches most people completely off guard. I always say you can't get out of the way of what you don't see coming.
To start, let's consider the backdrop of our current economic environment. Over the last 40 years, we've experienced a relatively benign economic climate characterized by declining real and nominal interest rates, beginning in 1982 from a 17.5% prime rate. This period was also marked by US dollar hegemony, allowing America to export its economic problems to other countries. However, this era of economic tranquility is ending, and we are now entering a more mercantilistic economy. A significant development in this shift is Project mBridge, which supports cross-border payments in local currencies and central bank digital currencies, CBDCs. A common criticism of such initiatives is the perceived lack of unity among participating countries to adopt a single currency. However, the architecture of Project mBridge cleverly addresses this issue by allowing each country to maintain its monetary autonomy and policy while trading their currencies within their own economies. The transactions are settled in a common token pegged 40% to gold and 60% to a basket of local currencies of the BRICS nations. This system significantly impacts the US dollar's value and its role in global reserves. Over the past 25 years, the bond market has underperformed compared to gold by a factor of 100%. In other words, a 10-year treasury has delivered half the returns of gold with no counterparty risk, highlighting gold's superiority. This undermines the reserve status of the dollar as demand for it decreases while supply increases, leading to higher inflation and interest rates. Recently, 59 countries expressed interest in joining BRICS, bringing the total to 69 countries. This bloc is 3 times the size of the European Union in terms of member countries. Unlike the EU, each BRICS country retains its currency, but uses a common settlement currency. This structure erodes the transactional and settlement value of the dollar in the treasury market, reducing demand for both. Imagine a global realization of this trend. What starts as a slow, orderly transition could quickly become a chaotic stampede, overwhelming the US with massive inflation. Rising interest rates would further strain banks, insurance companies, and other financial institutions heavily invested in treasuries and stocks, which are inversely correlated to such increases. Quantitative easing, or the practice of printing more money, has long-term consequences. It dilutes the value of existing currency, leading to inflation. From January 2nd to July 2nd of this year, U.S. national debt jumped from $33.9 trillion to $34.86 trillion, an acceleration rate never seen before. This unsustainable debt level poses a severe threat to economic stability. In this scenario, gold and silver become even more critical. They offer a hedge against the erosion of fiat currencies. With $150 trillion in unfunded liabilities and mandatory entitlements consuming all income tax receipts within a few years, the U.S. will have to borrow even more to fund discretionary spending, including military expenses. This untenable situation underscores the importance of holding physical assets that maintain value over time. Project mBridge and the introduction of the unit currency represent pivotal developments. The Bank for International Settlements, along with China, Hong Kong, Thailand, and the UAE, supports this system, which is incompatible with the US dollar. Saudi Arabia, the world's largest oil producer, is now a full participant in Project mBridge, further distancing itself from the dollar. According to Dilma Rousseff, head of the BRICS New Development Bank, the new settlement currency, referred to as the unit, will be pegged to gold. Each nation's gold will be held within its borders and audited, ensuring transparency and stability. This move not only enhances the role of gold, but also reduces reliance on U.S. treasuries. For investors, this shift underscores the importance of diversifying into gold and silver. As central banks and nations around the world accumulate gold and bring it home, the strategic importance of these metals becomes undeniable. For example, the Bank of India has significantly increased its gold purchases, and several countries, including Saudi Arabia and Egypt, have repatriated their gold from the New York Fed. In light of these developments, it's crucial to understand the broader implications of Project mBridge and the new unit currency. This isn't just a theoretical discussion, it's a fundamental shift in the global economic order. By accumulating and securing gold, nations are positioning themselves for a future where the dollar's dominance is diminished.
The debt jumped from January 2nd of this year to July 2nd from 33.9 trillion to 34.86 trillion. The debt is accelerating at levels that the world has never seen before. These are things that we could talk about, and I do, and I think they're important. And if we were sitting at our computers, I would focus on that. I think the thing that really has me intrigued and has me focused is the Project mBridge and the unit currency, which we talked about last week on the show. To me, this is connecting of the dots that I've been trying to put together for a very, very long time, where we have the BIS behind the Project Enbridge, along with China, Hong Kong, Thailand, and the United Arab Emirates, in a system that is not compatible with US dollars. We have Saudi Arabia, the largest producer of oil in the world, who is now signed on as a full participant to Project Enbridge in a system that is not compatible with US dollars. We have Delma Rousseff, the head of the BRICS New Development Bank, who says, in principle, we've agreed upon a new settlement currency, if you will, called the unit. All of these things I talked about on your show last week, but to me, it is the most important thing, because what it really does is I think it lights the fuse to the dollar, to the reality that countries will have far less incentive to hold treasuries. Aside from the weaponization, we now know that gold will be very pivotal in this new unit. And if you read the white paper on the unit, it says the gold that each nation uses for the unit tokens will be held within their own borders and audited, of course, but held within their own borders, pulled out of circulation, put into an escrow account within their own borders. And when we see not only the massive accumulation done again that we've been seeing, but like you said, the Bank of India purchasing 1.5 times what they did last year in the first 4 months, but bringing it home along with the 100 metric tons they've had since 1991. And it puts more into context about Saudi Arabia, Egypt, and the half a dozen African countries that repatriated their gold from the New York Fed just last month or the month before. These two locations, the New York Fed and the Bank of England, would give immediate access to the COMEX and the LBMA respectively. And so when we see these things happening, I talked forever about de-dollarization and about the BRICS and Saudi Arabia and all of these things coming together. What we are now seeing are these pieces being put together. And I don't think the all at once moment is upon us, but certainly the little by little is getting faster. And I think people need to understand, and I would strongly suggest researching the Project Enbridge and researching and reading the white paper for the unit, because to me, it really exemplifies and puts together what is important. And that is something that I continue to beat over people's head, because to me, nothing else is as relevant as and as important as finding a new system, which seems to be being thrust upon us here, like it or not. I think it's happening. Those central banks who brought their gold back following the Bundesbank's lead in 2017 and went on a massive buying spree for 2 years before. Then the BIS said, by the way, we reclassified gold tier 1. You don't think they knew about it? Of course they did. Just like they're all being told to buy gold and bring it home now, because the new BIS system is Project Enbridge. And the unit, which is traded on Enbridge, allows for the gold, which will be the major backing component, to be held within their own borders. If you don't see that as being wholly relevant and as a substitute for the U.S. Treasury and as a substitute for the U.S. dollar, certainly the beginning seed, anyway, to see how fast it manifests and how fast it grows. And I guess that remains to be seen. But to ignore what it really truly is.
As Project Enbridge gains traction, the U.S. dollar's dominance in global trade and finance is under threat. The move towards a gold-backed settlement currency among BRICS nations signifies a shift away from the dollar. This transition is not just theoretical, it's happening in real time. Countries are actively seeking alternatives to the dollar, and Project Enbridge provides a viable solution. The implications of this shift are profound. Reduced demand for U.S. treasuries and dollars will lead to higher inflation and interest rates. The U.S. economy, already burdened by massive debt, will face increased pressure. This scenario could lead to a loss of confidence in the dollar, triggering a financial crisis. Gold's role in the new financial system cannot be overstated. Central banks worldwide are accumulating gold at unprecedented rates. This trend is driven by the need for a stable, reliable reserve asset that can withstand economic uncertainty. Gold's intrinsic value and lack of counterparty risk make it an ideal choice for this new system. Project Enbridge's reliance on gold-backed currencies reinforces this trend. Each nation's gold reserves will be held domestically and audited, ensuring transparency and stability. This system provides a stark contrast to the current reliance on U.S. treasuries, which are subject to political and economic risks. While gold takes center stage, silver plays a crucial supporting role. Silver is not only a valuable investment, but also an essential industrial metal. Its applications in technology, particularly in renewable energy and electronics, make it a critical component of the modern economy. The demand for silver is expected to rise as the world transitions to greener technologies. Investing in silver offers a dual benefit: protection against economic instability and exposure to the growing demand for industrial metals. Silver's historical performance during economic downturns further underscores its value as a strategic asset. As we move towards a new financial system, it's essential to prepare for the changes ahead. Diversifying your investments to include gold and silver can provide a hedge against inflation and economic instability. Understanding the implications of Project Bridge and staying informed about global financial trends will help you make informed decisions. One crucial aspect to consider is the timing of this transition. While the shift to a new system may happen gradually, the pace is accelerating. Being proactive and preparing for these changes now will position you to protect your wealth and take advantage of new opportunities. Let's take a moment to engage with our viewers. If you have any questions or insights, please share them in the comments. We're here to provide you with the information you need to navigate these complex financial landscapes. Your input is valuable, and we're committed to helping you understand the implications of these changes. The transition to a new financial system represents a significant shift in global dynamics. Project Bridge and the move towards gold-backed currencies among BRICS nations highlight the diminishing role of the US dollar. This shift will have far-reaching implications for global trade, finance, and economic stability. Understanding the role of gold and silver in this new system is crucial. These precious metals provide a stable, reliable foundation for a new financial order. Investing in gold and silver can protect your wealth and offer a hedge against economic uncertainty. As we look to the future, it's clear that the financial landscape is changing. Project Bridge and the new unit currency represent a shift towards a more stable, gold-backed system. This transition will not be without challenges, but understanding the implications and preparing for the changes ahead will position you to protect your assets. For American citizens and our allies, this transition offers a unique opportunity. By understanding the implications of Project Bridge and investing in gold and silver, you can protect your wealth and position yourself for future opportunities. Diversifying your investments and staying informed about global financial trends will help you navigate these changes successfully. In conclusion, the world is moving towards a new financial system. Project Bridge and the unit currency represent a significant shift in global dynamics. By understanding these changes and preparing for the future, you can protect your wealth and take advantage of new opportunities. Stay informed, stay proactive, and remember that gold and silver offer stability and security in uncertain times. If you want to stay most up to date on the silver and gold markets, make sure to subscribe to my daily 5-minute silver and gold newsletter. It provides the latest expert insights, breaking news, market trends, and investment strategies, all in a concise format. Click the first link in the description to join thousands of others and enhance your investment knowledge right now. If you enjoyed this video, please give it a thumbs up and subscribe to my channel. Your support helps me stay motivated to bring more valuable content to you. See you in the next video.